whether it be through retail or through institutions. The institution piece is definitely, I would say, a global discussion. That's why I'm in Dubai a lot. That's why I'm in Riyadh. I'm in the US a lot, talking to institutions and trying to get them to participate. We're talking like minimum $100 million ticket sizes, right, at this point, right, in terms of, the ability to scale. Why? Because even though we started off with a wait list, we're obviously, the wait list is open in the sense that we've taken people off the wait list and into homes.
Yeah.
But that wait list still grows, right? Like MANZIL today, we have, alhamdulillah, about 20,000 families still on a wait list.
Wow.
That requires about $10 billion of capital.
Wow.
And it grows at $100 million a month with no marketing.
That's amazing.
So how do I fulfill that?
Yeah.
Right? And the easiest way, right? Like everyone that talks to you about where are they getting their money or how can they get more money, instead they should be saying, how can we help?
That's right.
Because there's 2 million Muslims in Canada, right? And not all of them are over 18, but let's say 50%, right? 50% are over the age of 18, 50% are less. And, I've always had this initial kind of concept or goal of why can't we get 10,000 Muslims across Canada and invest $10,000? And I'm not even talking about money out of their pocket. I'm talking about you have money already invested at the banks. They're not going to provide halal financial services for you. It's most likely sitting in cash. So why aren't you investing it in the MANZIL mortgage fund at a very reasonable return, right? It's monthly, it's liquid, and we can talk about the mechanics even if you want. And it supports your brothers and sisters into home ownership, right? You can shift them from rent to home ownership.
For sure.
And 10,000 for 10,000 gets you what? $100 million.
Yeah.
Right? That's the starting point, right? Like in the mortgage industry, in the mortgage business, if you don't have $100 million fund, nobody talks to you. Mm-hmm. Why? Because that 100 million sends a signal to the market. It sends a signal to the market that they're well established, that there's enough demand, and potentially, right, there's a long enough and a strong enough track record that enables additional business, especially from the institutional grade level, right? We're talking pension funds, we're talking banks, we're talking family offices. And this is where we need to, and by the way, Brother Nabil, our average account size is double that, right? Mm-hmm. So we're not even talking about give us $20,000. Sure, that's fine. That means we only needed 5,000 Muslims, right? Or we find 1,000 Muslims for $100,000 accounts.
That's true.
Right? The math is very easy. What's 10,000 Muslims out of 2 million? 0.5%? Right? We know they're out there. We've done the study. There's $20 billion of Muslim wealth in Canada. And it's not with MANZIL. It's with the banks. And what are the banks doing? They're taking that money and they're using it into a ribawi-based system. So even though you're earning zero return, your money is enabling the riba system. Right?
That's right.
And I'm sure maybe your brother had discussed that.
Yeah.
In terms of how deposits, fractional banking works,
yep.
all of that stuff, right? And we're very familiar with that.
That was actually going to be one of the questions, was the whole fractional reserve system in kind of all banks around the world.
Yep.
So if MANZIL or another Islamic mortgage institution gets institutional support and they kind of use a fractional reserve system, mm-hmm. how does that affect Sharia compliancy, or does that affect Sharia compliancy?
It doesn't affect Sharia compliance at all, as long as the agreement between us and them is a Sharia compliant one, right? Even amongst the scholars, the source of that capital isn't really an issue, right? So, for example, let's say we got a retail client, some Muslim that invested in the MANZIL mortgage fund. We don't know where he got that money from in terms of how he earned it, right? Mm-hmm. It could be in halal means or it could be in haram means. But forget about that. What if he deposited those funds and those funds came from a line of credit?
That's true.
Right? The line of credit that he took the money from is a contract between him and the bank, right? If he takes money out of his line of credit, he has to pay the bank a certain percentage rate. 7%, 8%, and he'll pay that, right? So if he deposits $10,000 in MANZIL, the cost to him is more than $10,000 because he borrowed it from somebody else. But when he deposits it through MANZIL, Like the contract between us and him is completely Sharia compliant because all he gave us was $10,000 as an investment into the MANZIL mortgage fund to be used for murabaha and musharaka mortgage financing. And we have an agreement that we will share that profit with him. Khalas.
That's it.
That's it.
Simple as that.
It's as simple as that.
So about musharaka and murabaha, inshallah, if you can kind of just explain to us what are those models? I know that those are the popular models for Islamic mortgages. So there's musharaka and murabaha, and how do they work?
Absolutely. So murabaha or cost plus profit, or profit, based agreements. Here in Canada, they like to call it like, oh, it's akin to rent to own, right? But I'm like, well, we have a jada for that.
That's right. Yeah.
Yeah. But, pure form murabaha, right? It's basically, I like to say, trade-based financing, okay? You are in the market for a home, inshallah, alhamdulillah, and you want to buy a home. You find the home that you want, right? You're working with a real estate agent. You find a home that you want, and you put an offer, and the offer is accepted, okay? That offer of agreement of purchase and sale gets assigned to us as MANZIL. So there has to be an assignment clause, okay, in there. Without the assignment clause, we can't take it over. And if you've done it after the fact, we would just go back to you or your realtor and say, hey, can you introduce this assignment clause? Because as part of MANZIL's financing structure, we need to have, the home assigned to us on closing. Fast forward, nothing happens in between. Just fast forward to closing, right? So now we have a bunch of legal work that needs to be done. What happens is MANZIL legally will acquire the home, right? I'm the director, and I sign off on every mortgage or home ownership, right? So you will see my signature on the paperwork saying that MANZIL has taken ownership of this home.
I see.
And then we will, we will resell it back to you. And this would have been pre-agreed upon, right? Mm-hmm. So if you bought it for $500,000, let's say you put an implicit profit rate of 5% over 25 years, that 500,000 plus 5% over 25 years, 750,000 needs to be paid. Your monthly installments are $2,500 a month for 300 months. Okay, pre-agreed upon. So now I've sold that to you for $750,000. That house is now in your possession. It's in your name. We just have a mortgage charge or lien to ensure that the financing we've provided you is protected. And you go on your merry day making your installments. You have full use of the home. You can rent it out. You can renovate it. It's yours. You're on title.
I see. So is that what happens if somebody wants to sell the house? At some point, does that affect the structure somehow, or does that affect your profit? How does that?
Yeah. So it doesn't affect the structure at all. You can sell it. The profit piece is an important one because you've agreed to commit, right, to the full profit.
Yeah.
Now, contractually, from a Sharia perspective, we can't say that if you get out of the contract early, we'll rebate you, right, contractually in the contract. Otherwise, it's deemed impermissible or non-Sharia compliant. However, nothing stops you as a consumer to make that request to us. Right? So you can say, hey guys, I found a nicer home, a bigger home. I'm moving, right? I need to sell. Will you forgive me the remaining profit, like the future remaining profit? And it's at our discretion. Right?
I see.
We can say yes. We can say no. We can say, you know what? We'll forgive you some, but you have to pay the rest. It depends, right? Depends on our situation. Maybe we need the money so we can give it to somebody else.
Yeah.
Right?
Yeah. Makes sense.
So maybe you get more favorable terms, right? Mm-hmm. So that's murabaha. Musharaka, which is like 99% of our uptake right now, right?
Yeah.
Everybody uses it because in murabaha, you can only use it for new home purchases. You can't use it to transfer an existing mortgage or do refinances or takeouts.
That makes sense, yeah.
So with musharaka, much more flexible product. New purchases, refinances, transfer your mortgage over from a conventional bank over to us, equity takeouts. You can do the whole thing. And you can also do shorter terms from a pricing perspective. In murabaha, if you want the cheapest payment, you have to go with the longest term, 25 years. And right now, to get a 25-year fixed rate murabaha mortgage is very expensive.
Yeah.
With a musharaka, we can go 2 years, 3 years, 4 years, 5. We can do any number we want. But, right now, MANZIL has 2-year mortgage, 3-year mortgage, 4-year, and 5-year, all musharaka based. Okay? We would basically enter, again, assignment clause is required. Why? Because we have to now partner with you
That's right. Yeah.
on this home. And so we actually create a formal partnership agreement under the laws of the particular province,